Hey, ladies and gentlemen, my name is Matthew Buckley, and I'm going to be talking about trading volatility under the Trump market. And you might not think of it as the Trump market, folks. This guy, well, he actually tells you he is responsible for this market, right? Well, then he's got to be responsible for the recent market pullback and the recent volatility. You just can't own it on the way up. You got to own it on the way down. So I'm going to talk to you about how we can potentially trade the Trump market and how volatile it is. We're having an absolute blast, folks. If you didn't have fun in January and February trading this market, you're absolutely doing it wrong. I can guarantee you that. Like I said, my name is Matthew Buckley. My call sign is Wiz. I'm pretty sure my parents love me. That was my God-given name. I earned that call sign flying the FA-18 Hornet for the United States Navy for about 15 years. Did some cool stuff when I was in the Navy. Got to fly in some stolen MiGs over Pakistan. Got to fly with the Blue Angels. Flew 44 combat sorties over southern Iraq, and also graduated from the Navy Fighter Weapons School, hence the name Top Gun. Why Top Gun options? Well, folks, when I was a young fighter pilot, I applied everything that I was learning flying a fighter aircraft, being disciplined, managing risk, having a strategy, contingency planning, knowing when to get out of a bad situation before it got worse, or knowing when to get out of a good situation before it got worse, and not being emotional about taking action with limited information. It was always about maximizing our wins and minimizing our losses. Eventually, I popped up on the radar of one of the largest volatility arbitrage firms in the world, headquartered right here in the beautiful Board of Chicago. That's the intersection right there of Jackson and LaSalle, and those big windows was our trading floor at Peak Six Investments. So had a great time there. Helped start a hedge fund. Helped start the retail brokerage options house. I got to be honest with you, I've going from a little old retail trader to essentially help run one of the largest vol arb firms in the world was pretty cool. I felt like Valentine in trading places. While I was there, in addition to being the managing director of strategy, I was the founder and CEO of Peak Six Media. We were the options news network, ONN.TV. I know John and Pete Najarian pretty well from my time in Chicago, and they do. CNBC does a good job of paying lip service, but we started the Options News Network, and we were around for about 3 years there, and we gave retail traders such as yourself behind-the-scenes look at the options activity. We'd shoot on the floor of the CBOT and the CBOE, and I had an absolute blast. Got to be honest with you, Chicago, great people, great food, but 9 months out of the year, you want to put a bullet in your head. It's just I'm a Navy guy. I need a beach. I need an ocean. So decided to take my squadron and move down here to South Florida, where we're based in Fort Lauderdale and Boca Raton. Today, I'm also going to teach you the tactic we're going to employ. It's top secret. I guarantee you've never seen this tactic before unless you're currently one of my members. It's called a trade. Okay? Real quickly, if you place a trade, you want to make money. Okay, Wiz, let's start with the duh moment. I get it. With a hedge, I want to lose money. Whoa, hold on. All right, now you lost me. Think about it, folks. With a trade, you want to make money. With a hedge, I actually want to lose money, because if I lose money on a hedge, quote unquote, that means all my other positions, my longs, were protected and they're going up. It's the cost of doing business, folks. I don't sit here at this kitchen table and every month go, some bitch, I'm losing money to every month to USAA on my auto, home, and life insurance. That is until I get rear-ended by a blue hair down here like I did the other day, and you're glad you have the insurance, okay? But I'm going to squeeze those two words together today and teach you a tactic called a trade. It's a trade where I'm going to make money, and it also serves as a hedge. Why? Because recently, folks, unless you just dropped off the other side of Mars and you're taking a visit here, take a look at this chart. If you don't know what happened here, this rip your face off rally in January is obviously the Trump tax cuts. Every company and their mother and my mother coming out and saying, holy crap, our earnings going forward are going to be great. The average S&P 500 company, folks, is estimating an 8 to 10% increase in earnings per share. That's freaking phenomenal. Not only that, they're giving money back to their employees, they're hiring, they're acquiring, and they're buying back their own shares. Oh my God, that's awful. Guess what? That's awesome, especially if you're in this market. But as this rip your face off rally really took up steam, what crowded trade did you start to hear about? If you didn't hear about this at a retail trader, you're joining TGO by the end of this video, because you're trading in the wrong place. Everybody except my mother and me and our traders at TGO got short volatility, right? Nothing can go wrong. Look at this, woohoo! except it could. I predicted I said the first or second week in January, we're getting hypoxic. I mean, we're climbing Mount Everest right now. We're running out of oxygen. We got to take a little bit of a break. So I said first or second week, we're going to take a little bit of a break. And then we started to pull back a little bit. And as we pulled back a little bit, what happens? Volatility starts to increase. Oh boy. And then if you're short anything, when it starts going against you, what do you have to do? You have to get long, right? You have to buy back that. So volatility went through the roof. So being short volatility was the smart cocktail party trade for about a year until it's not. The analogy I use with my members at Top Gun Options is these short volatility people were running around in front of a steamroller picking up dimes. Great work if you can do it, until their cape got caught in the steamroller, and then they all got obliterated here. So we predicted that if you look at the 50-day moving average on the S&P 500, that blue line, and then the red line down here is the 200-day moving average, I call this no man's land, right? World War I trench warfare. There's the Allies and there's the Germans, right? The market don't like hanging out in this no man's land. So I predicted, and we were right. I said we're going to get. You can also call them magnets, right? We either get pulled down to a moving average until we see what's going on, or we get pulled back up to it. I predicted we got pulled back up to it, and then you can, once you become a member, you can watch my last 3 weeks of videos. I said we're going to chop around the 50-day moving average until we decide a direction. And in my opinion, that direction is going to be up. Well, holy crap, look at this. I'm going to explain what this was, right? What was it, Thursday? Folks, this was the hunt for Red October, man. This was old Soviet Union. Putin coming out of the blue saying, hey, United States, we invented some new super cool weapons that can kill all of you and get through your defenses. The hell did that come from? So that alone, in a kind of average news day, would have caused this market to freak out. Then what happened? Jerome Powell testified this week, the new Fed commanding officer. On Wednesday, he was a little hawkish. And that freaked the market out, meaning he was saying, hey, the economy's looking really good. We're probably going to get on a good interest rate increase plan. Remember this wisdom, folks. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. So we've been in a near zero rate interest environment since Ben Bernanke saved capitalism, which he shouldn't have during the financial crisis. Folks, not everybody gets a trophy. Businesses need to fail. Banks need to fail. People need to be reminded that the market's a self-cleaning oven. It was awful, but anyway, not going to legislate history. In 2009, when I was in the board of trade, I said, let them burn. Bear Stearns and Lehman Brothers, let them go. From the ashes will rise a phoenix. Mom and dad who have money somewhere need to know that it ain't risk-free. All the disclaimers and disclosures at the beginning of these things don't mean anything, including the paper or the screen they're printed on, if that never happens. People become immune to risk. Anyway, folks, that was a little bit of a tangent. So Thursday, when he testified, he tried. It's funny when the Fed chief gets 2 days of testimony, because after he saw the market reaction, I guarantee you he huddled with his other folks and said, oh, crap. The Fed, to be honest with you, I know some people at the Fed. One of them used to be a heavy there. He's like, hey, Wiz, we don't mind taking the froth out of the market every once in a while. Wink, wink, meaning we know we have this chart. Okay, we saw all this. I mean, hell, what was it, a year ago, Janet Yellen, the old Fed chairwoman, sounded like a hedge fund manager. At one point, she's like, well, biotechs look pretty overvalued. I'm like, where the hell? In your charter from the Congress, it says inflation and employment. Where does it say you're a sector analyst? So anyway, we had Putin, Powell, and then what happened? Holy crap, you wake up and Donald Trump's tweeting and blasting away at tariffs. Now, I think this is awesome, okay? I jokingly say I wear two suits at Top Gun Options. I wear my flight suit, former naval officer, God bless America. I'll give you my opinion as an American. And then I wear my $6,000 Armani Gordon Gekko suit from Wall Street, and I say, I don't give a shit. If it's going to make me money, I don't care what it does to anybody else, right? This is why I told my members, we dumped out of Facebook a while ago. This dude's, he's awful. Facebook is dead money, folks. It's political. When the CEO says, I don't care about profitability, I want to do good, I'd sue you. If I own your shares, I'd sue you the second after you finish that comment. As a CEO, folks, you have a fiduciary duty to who? Not the world, to your shareholders. I don't care about the world, folks, if I'm a Facebook shareholder. I care about my shares going up and you doing your job. So, hey, Zuck, you want to do good? Take the company private and do whatever you want to do with it. Until then, you're dead money to me. He's Fredo, like from Godfather. Same thing with Apple. All the fangs, guys. Look at this headline. We're going to talk about this week in our Full Throttle launch. This is NBC News ain't no pal to the president or Republicans or conservatives. Look at this headline. Silicon Valley faces make or break moment amid big tech backlash. Gone are the glory days of glowing praise and good PR for tech companies. Whether it's the Russia stuff or Apple telling the FBI, hey, we're not going to unlock that San Bernardino ISIS killer or his wife's iPhone because of privacy. Even though the FBI's like, there could be intel in there, other terrorist attacks. No, privacy. But at the same time, Tim Cook's employing like 9-year-olds in China to make his phones, right? And unlocking them and putting government tracking software in Chinese phones. But he's going to give a big FU to our government if it's going to save lives. Can't stand the tech companies now. Can't stand the limousine liberal companies out there in Cupertino or the Bay Area. The only one in a FANG, and I don't even think this is a FANG, Amazon. It's a services company, folks. They use tech. The only quote tech you need to be in is Amazon. Ditch this Facebook, Twitter. Twitter's another political piece of crap. But anyway, the tariffs thing, as an American, you have to agree with. And Trump, man, love or hate the guy, he is playing this great. If you didn't read The Art of the Deal, you don't understand what he's doing. I do as a businessman. He is shy. And he said when I met with President Xi Jinping over in China last year, he's like, hey, man, I don't fault you. If you can negotiate a $500 billion better, import-export deal against the U.S., God bless you. I take my hat off to you for being a good negotiator. Now I'm in this chair, and it's going to be even. We're coming back after you. That's what's happening, folks. He slammed the presidents in front of him, and he was right. We have so many unfair trade deals. A great deal, ladies and gentlemen, is a win-win. It ain't a win-lose. Because the losing side eventually, unless they suck, wakes up. And now that we have this guy as our skipper, he's woke. He's a New York businessman, especially in real estate, man. He knows how to negotiate. So don't give me, and here's the funniest part is the politics of it. The Democrats are clueless as to how to handle this. The AFL-CIO, can you say union? Every union went bananas the other day thanking the president for this. Why? Steel, aluminum, all this stuff helps U.S. blue-collar workers. Don't give me this Wall Street. I love the Wall Street Journal. This crap about it's going to hurt his pro-business agenda. Do you know how much aluminum I saw the math. In a case of beer, you know how much a case of beer would go up if there's a trade war? 0.6 of a penny. I don't even know how much a case of beer is, but I'm pretty sure that's not going to impact my buying decision. Steel or aluminum in a car. I saw the Nucor CEO. Great interview. If you want to see 3 CNBC hosts smacked around and taught to look like school children, the former Nucor CEO. Go to our Facebook page and watch this interview. This is a must. This guy was awesome. He said this is a buy the dip. And folks, it would add to an average car being bought in the United States, $37. If you decide not to buy I'm sick of listening to these Democrats on TV. First of all, like I said, they're lost. They're one of their biggest constituencies think this is freaking awesome, but they're trying to hit the president on, oh my God, those tax breaks you just gave everybody. The crumbs that Nancy Pelosi says that you got, a couple grand in your pocket is crumbs to Nancy behind her big walls in San Francisco and her armed guards. It negates the tax cut. Are you kidding me? 0.6 of a penny in a case of beer or $37 in a car is going to crimp our economy. Go back to class, folks. I can't stand it. All right, we're almost getting to the tactic. I'm going to teach you, folks, here when you become a member at Top Gun Options. It's called SOT, Strategic, Operational, Tactical. I'm giving you a strategic and operational brief, and then we're going to get tactical with a trade. SOT. If you logged into this video and you expected me to, okay, here's the trade, Do not sign up for Top Gun options. You don't understand it, and you're probably not that good of a trader. Why? If you wake up in the morning and you put on Comedy Central, CNBC, with your bunny slippers, some dude's talking about Tesla. He's got a nice suit, good-looking hair. I'm going to do what he says about Tesla, and a week later you're broke. Good. You deserved everything bad that happened to you because you're not using your brain. Strategic. What's going on in the world? Putin. Out of nowhere, Putin comes with I'm going to vaporize America. Holy crap. Operational. What's going on here in the United States? The Fed, Jerome Powell. And then we're going to get tactical in a couple seconds here. So I'm not worried about this at all. So here's what we're going to do. Stocks trade lower. Let me see if I needed to cover anything else. Volatility regains the upper hand as trade shift rattles markets. I don't care, folks. Well, I'm shooting this over the weekend. When is March 3rd? We have a big full throttle launch coming up this week. If you want to attend that, if you're getting this and it's not too late, try and head to go.topgunoptions.com/joinft. Okay, if you do that, I'll throw in a copy of our OPCL, our options pocket checklist, which is $45 value, and also our trade plan. But I'm going to open up our squadron March 5th through 9th for a full week of free live trading and training. So hopefully you're watching this sometime in that time frame. Just register anyway, and you'll get to be able to watch the replays. But anyway. I'm going to actually talk about this all during that week. So again, if you're watching this after those dates, please register and you'll still get access to the recordings because, you got headlines like this from Morgan Stanley. Beware, there is no liquidity in this market. That's kind of that's a little scary. Now let's get going. Let's get tactical here. So let me pull up my trade here. So here's what we're going to do is I'm going to talk through a potential. We're going to trade some volatility. Okay, volatility, if you don't know, folks, reverts to its mean. What does that mean? It means whenever you hear the word volatility, whenever I say the word volatility going forward for the rest of this video, insert the word uncertainty. Here's the short volatility traders getting destroyed. I mean, hell, the VIX plumbed 50 for a little bit there. Oh my God, we're all going to die. No, we're not. Maybe we will. No, we're not. Nope. Powell, Putin, and Trump. Whoa, we're not, folks. Can anybody see a trend here? Volatility reverts to its mean, folks. Okay? It reverts to its mean. Let me grab a line here. Can anybody see a trend with volatility? It goes down. Let me open a one-year chart of vol. It's a heart rate monitor. Something freaks the market out, then it goes away. Something freaks the market out, it goes away. Something really freaked us out. Didn't freak me out. This was the short volatility traders getting wiped out. But look at this, folks. I predict, and I'm going to give you my strategic mindset right now. It is cautiously bullish. I was market neutral a little bit. I said, hey, as we chop through here, I'm going to be neutral to volatile. And with this kind of 3 days this week of holy crap, that might look violent, folks. It might have felt violent to you. It wasn't. It was orderly. And like the Nucor CEO said, and I said to my members, I'm like, this is a buy the dip, folks. Check out our weekly options trade. So the beginning of the week, the 27th, Monday, the market was closed, right? February 27th, or no, I had to host I had to host something on Monday, so I did a joint brief on Tuesday. On Tuesday, we closed 3 trades for over $7 grand in profit, and look at the weekly options trade we put on Monday, right here. It was the Amazon March 2nd, expired yesterday, the $14.97.5, $14.95. Look at how much we made this week. While only risking $5,300, we made $2,300. Let me let that sink in again. And let me show you a chart of Amazon, man. If you didn't follow Amazon this week, look at where it closed. It closed right above 14. Well, it closed at what? 1,500. This man, not today, 3 days. How about that? It was a very interesting day to trade Amazon. I sent a text alert out to my traders. I'm like, hang on, this is gonna be interesting. But let me show you the trade. Let me bring up VXX because this is what we're going to trade. My strategic mindset, like I just told you, is cautiously bullish. Cautiously meaning what? I still think we're going to chop around that 50-day until our next leg, higher or lower. In my opinion, it's higher. I think we go into Q1 earnings season, and it's going to be disgusting. The financials are going to be printing money. Looks like a lot of the infrastructure stocks are going to take off. We have a position in CSX. It's game on, folks. This, I predicted. I said we're going to convulse for about a week and a half to 2 weeks around this 50-day moving average, and then we're going to go up. Now, barring, I get it, man, barring a black swan event, North Korea, Putin, something goes bump in the night. Obviously, all bets are off, but the fundamentals of this economy are still strong. That's why Jerome Powell was able to say this week, I think things are looking pretty decent. That's bullish, folks. When the Fed chief says, I think we can start raising interest rates because things are kind of good. Why is that bad? Well, I get the whole interest rates are high, whiz, stocks will die. Come on now. That's old stock market thinking too. That's my dad's stock market, and he's not here. God rest his soul. So we're going to use VXX because trading VIX, when you trade VIX, real quick, folks, you're not trading the VIX. You're trading futures, right? On S&P options 30 days out on the S&P 500. So a good proxy for trading the VIX is VXX. When you sign up, I'll show you how to grab a trial here in case you can't make it to attend the full throttle launch. But here's what we're going to do. I'm going to throw on what's called a trade and a hedge, right? So it's a trhedge. I am bullish on the market, which means I'm bearish on volatility. I think this heart rate monitor, oh my God, we're all going to die. Everybody short volatility's dead. No, it's fine. All clear sounded. No, it didn't. Yes, it did. No, it didn't. Here's the Putin, Powell, Trump pop recently, and then on Friday the market finally digested and said, who cares about a trade war? Like really, China's going and Canada's going to start slapping these huge tariffs on Harleys and all sorts of stuff. It ain't going to happen, folks, and even if it does, it's fair. I completely support the president on this. He's trying to make something fair. God forbid something's fair. Not everybody gets a trophy. We certainly haven't been getting a trophy in these trade wars. So here's what we're going to do. I'm going to get bearish on volatility out to next Friday. I think over the weekend, I've been on calls all day, Skypes, running around in the yard in between calls here with my kids. And I got a lot of calls tomorrow. And we got the Sunday talk shows. People are digesting this. It's funny to see Democrats twist in the wind and go, wait, how can we be angry at Trump about this? Oh, well, it's destroying his tax cut. 0.6 of a penny for a case of beer, or a $37 increase in the price of a car. Silence. The adults are talking. Here we go. So let's pull up our options chain. And if you don't know what you're doing, you're going to sign up here, and I'm going to teach you how to trade options. I'm going to do what is called a bearish double vertical. And you need 3 reallys in order to do this tactic. It ain't an option strategy, folks. There is no such thing as an option strategy. They're tactics. A strategy is saving for college, income generation, managing risk. An option strategy ain't an iron condor or a bear call spread. Those are called tactics. Tactics support a strategy. Trust me, I'm a military guy. I know my terminology. So I'm really, really, really bearish on volatility. I think it's going to smash like it did right here, like it did right there, and it's going to do again next week. So let's go out to Friday. That's the regular March expiration, which is 2nd, 9th, 16th. So it should be, there's the 9th, there's the 16th. So yeah, let's go out 2 weeks. Well, it depends on when you're getting this video. I'm going to, a double vertical is, folks, is 2 vertical spreads on top of each other with the same strategic mindset, right? So I'm going to sell, let me just put 100 in here for now. I think it might be 150. I'm going to sell 100 of the regular March 45 calls. Those are right at the money here. Let me bring up the chart. So if I'm really, really bearish on volatility, I'm gonna put a bear call spread right here. Whoa. I'm going to put it right there because I think this thing's going to slam back down. So I'm going to go right at the money. The 45, 45 and a half. Let me get rid of these real quick. This is known as what? Selling the 45, the 45s and buying the 45 and a halves here. This is called a bear call spread. It's also called what? A credit spread. It's a credit spread. So let's just analyze this real quick. We're risking, I could probably do about 150. Let me do this, 150. So this is just the bear call spread. I'm risking about $4,400 to potentially make $3,200 in 2 weeks. Wow. But let me ask you kind of a master of the obvious question. If you think something is going down, Wiz, I think you're right. I think the market continues to maybe chop around, but to the upside. Putin ain't going to do another one of those speeches saying he's going to kill us. Jerome Powell already testified, and Trump already fired his shots across the bow. Now things are known. When things are unknown, the market freaks. When things are known, it defreaks, right? So if you think volatility is going to go down, you also don't what? Believe it's going to go up. So that's why I'm putting on the bear call spread is I don't think vol is going to go up, but I also think it's going to go down. So I'm going to turn around and buy a bear put spread, maybe the 44, 43 and a half. Let me do the same amount of contracts. This is a debit spread, folks. But check this out. And these need to be puts. But check this out, folks. I need to buy and then sell the bottom ones. So this, ladies and gentlemen, is it's almost even. We almost did this for a credit. We almost got paid to do this with a credit, to hedge and say that volatility is going to come in. Let me go down to maybe 125 contracts. Let me take a look at my risk real quick, and then I'll explain it. I think I was right with the 100. Always go with your gut, right? Let's try 110 contracts. Here's what I'm trying to do, guys. I'm going to teach you here at Top Gun Options. We have what's called SOPs, Standard Operating Procedures, and I manage $100,000 model portfolios. And I don't want to. One of my SOP says I don't want to risk more than 5% or $5,000 on any one trade. That's me, man. You might be 2.5%, you might be 10%. That's me. After a quarter of a century of doing this, I know that I don't want to that's the right amount of chips for me based on a $100,000 model portfolio. So, we could probably go down to 105, maybe 101 here. So, 101 Dalmatians. That's perfect. $5,100. So, let's go over to the picture immediately and show you what a double vertical is. There's the VXX. There's volatility, right? We want this to do what? We want that blue line to go to the left. We want volatility to smash as the market goes up and recovers, right? So look at the picture, folks. A double vertical is simply two vertical spreads on top of each other with the same strategic mindset. Bear call spread, bear put spread. This is an awesome tactic because look at this. The bear call spread is what I call a credit spread. I'm taking in some coin to do this trade. What did I do with that coin? Well, I turned around and bought a bear put spread. Isn't that awesome? It is so, and you could play with these strikes and maybe even get this for a credit. But right now, this is look at this. I'm spending, look down here. I'm going to spend, oh my God, $100, right, in this trade. That's it. Here's my max potential loss. We always look here first, Mr. Sad Face. I'm going to teach you here at Top Gun Options. You always want to look at risk first. Whether you're an options trader or a fighter pilot, you want to know how you're going to get killed or how you're going to get blown out in a trade. And if $5,100 ain't acceptable for you, don't do the trade, or maybe you do Wiz, I don't want to lose more than $2,500. Then you do 50 contracts. I don't want to lose more than 10. Then you do 200. I don't know. Can't give you investment advice. That's between you and your registered investment advisor. So look at this trade. We're risking $5,100 to potentially make about $5,000. It's almost a 1-to-1 risk to reward ratio, what I call a thrust to weight ratio. So look at that. Risking 5 to potentially make 5. I love this trade. Okay. Now, I'm running a little long on time here and didn't expect to do that, but remember, I had to give you a strategic brief. There's no way in hell, if you ever listen to one of these videos or any trader or any trading service just says, all right, hey, welcome aboard. Here's the trades for today. That's awful. That's like airdropping you into Afghanistan, throwing a rifle at you and saying, good luck. March in that direction, by the way. Shoot bad people. What? So you had to listen to my SA, situational awareness. What the hell hit us last week? Putin, Powell, Trump. Oh my. All that's over with, right? He might give another speech next week. I don't care. He's already inoculated us to the fact that he made some new super cool toys that can kill all of us. What about this guy? The good of this is that I guarantee you he and his staff watched last week and said, oh crap, we don't mind taking some froth out of the market. That might have been a little too much. They might be out next week doing damage control and make it bullish. And then this thing, I think the politics of it are great. I have my popcorn out laughing at how Nancy Pelosi and Chuck Schumer are trying to make this a bad thing, since all their biggest unions love the president for doing this. They're Reagan Democrats, right? So I gave you a brief about why you had to have SA, right? If you just watch the end of this video, you go, why the hell is this guy getting bearish on volatility? Now you know. SOT, strategic, operational, tactical, and that's what I'm going to teach you here at Top Gun Options, okay? I'm also going to send this out to my current members as an urgent alert. So this is going to be a trade alert for my folks here at Top Gun Options. Folks, we have been printing money. Ladies and gentlemen, during this pullback, we've been trading an iron condor on Win. This bear call spread right here, we were in a live trade brief when he resigned. I'm like, oh man, let's smash the hell out of, remember, Win's getting all these sexual harassment allegations. We slammed the hell out of it with a bear call spread, made about $2,000. Then we put on a bull put spread when it stabilized. Right here, we put on a bull put spread. Why? I said the dude's got to resign. Unlike the coward sheriff down here in Florida who's still in office. Don't get me started. I said the dude's got to resign eventually. Let's put on a bull put spread. Literally 1 day later, that trade, he resigned. The trade popped. We could have potentially made $2,000, but I did what? We made $1,000 in a day. If you can make 50% in a day, folks, we close that one. So there's that was $2,000 here, $1,000 here, and then we put on 2 iron condors. What's an iron condor? It's a range-bound trade. I said Win doesn't know where it's going. It doesn't. I gave really good briefs on different reports, and he's suing or being sued, and he's fighting back. We've made over $12,000 trading Win. When was this? Hold on. Since the end of January. So look at this chart, folks. Does that look like the S&P 500 and everybody dying and going to hell in a short vol trade? No. This was immune to it. Look at our Raytheon trade. We're in this defense stock, folks. RTN. We'll talk to you about Raytheon. Does that look like it freaked out at all? Not really. We've been this trade is up over 520% since we put it on. We put on a long call diagonal right here after this earnings miss. We put it on right about there. Look at that trade. And we've been trading bull put spreads all the way up. Folks, we're having a blast here, okay? So let me get going. Let me show you how to just go to our homepage if you want to take a test flight. It's topgunoptions.com. And then you can scroll down here. And if you're familiar with skiing, and even if you're not, you can figure this out. Beginner, intermediate, advanced. I think for the price of a really bad bottle of Pinot Grigio, you can take a 2-week test flight into one of our services, retirement, intermediate, or the weekly options one, which is a little bit more tactical. I just showed you that we made we made $2,300 this week, and the most, if Amazon went to zero this week, the most we could have lost was $5,300. So that was a hell of a trade. And I'll give you a heads up. This $2,300 on one trade paid for an entire year of your membership here at TGO. Okay, so you can go to our homepage and grab a 2-week test flight, or if you're watching this video during the week of 5 to 9 March, register. Head to go.topgunoptions.com/joinft. That means join full throttle. And you know what? Actually, like I said, even go register for this, and you'll get access to the replays. You can watch the entire week of trading. We're going to have a blast, man. I'm going to cover this volatility trade live, along with a lot of other stuff, folks. Okay. All right. I got to get going. Beautiful day down here in Florida. Think I'm going to go hit the beach. So have a great rest of your day. Happy hunting. Make sure you hedge. God bless and welcome aboard Top Gun Options.